afternoon, traders, and welcome to the Blue Line Metals Edge here for Friday, February 3rd. I'm Philip Strebel, Chief Market Strategist at Blue Line Futures. Remember, if you need additional information, you'd like to get some of our research here, go to our website, bluelinefutures.com, highlight over research, sign up for a free 2-week trial. You just put in your basic information. We'll get that out to you. I am revamping the tactical insights, the FX rundown, the breakfast report, and the bond breakdown over the weekend. Going to change some things. I did get some feedback on, on the ease of using it and stuff like that. And I really want to lay it out a little bit different, make it a bit more actionable for you guys. So getting into the markets here today, couple things. Looking at futures performance. This is one of the websites I go to a lot, finviz.com. They got a real nice performance chart over here, the one-day relative performance. Nasty move in platinum and silver. Same with gold. And look at the on the upside, of course, what is the catalyst here? Really, it's the dollar index. Also, you do have, if you look at 30-year Treasury and 10-year Treasury notes, they're both down pretty good as well. We're down about a handle on the 10-year, and we're down about 2 handles on the bonds right now. So here's your catalyst and your driver today. You got this non-farm employment report, and you also got the unemployment rate. And the Fed keeps saying that the labor market is going to have to, it's so tight right now that it's going to have to loosen up, and then that's when they would be concerned. That's when they're going to start being much more dovish. As long as labor is really firm, they're going to keep the gas pedal going down as far as raising rates. So here, 517,000 jobs created. They're only expecting 193,000. So we can look at the chart real quick. It doesn't look like much on the chart, but it definitely is a spike up there as far as we're concerned. And then here's the other thing, the unemployment rate down at 3.4%. That's probably a record. That's probably the most employed that we've been. Now, I was talking with another client. He was saying it was probably all the retired people coming out of retirement, realizing that inflation's been so high, they're going to need to get a job again. So that's probably not an inaccurate statement whatsoever. So I talked about, a strategy on silver and a strategy on gold in the last week here. And if you look, we'll start with gold. Gold, big reversal. I thought it was breaking out to the upside. I thought we were going to miss it here yesterday when you had, and Wednesday when you had the jobs report come out, or I'm sorry, the Fed come out, and they were a lot more dovish than what you thought. You saw the dollar index go down. You saw you saw gold go up, silver go up. Most asset classes were going up. You get the big reversal yesterday, and then you get the follow through today. So we really broke down, and it was all on that number. So if you go and you look at like a 5-minute chart, you could see kind of when that volatility came in, and it's tough to see on this particular chart, but on a 5-minute chart, you can just see how big that move was right here, where we went from 1930 down to about 1910, and then since then we had some buy-in. We had some recommendations out. We bought at 1920, we bought at 1900, and we've got some more buys down at 1885. So we're going to see how this one plays out. I did see some of the independent, like third-party research. They were putting out a lot of buy recommendations on the gold market. They like it as well. They're trying to play that the Fed gets dovish into the second half. So you're going to have to look at this more like a longer-term position here at the moment. Going into silver, I knew this was going to kind of happen because of the fact that I talked about the average range being in the 75 to 77, that much movement in there. So, the market, when it makes this move, it's going to blow out to one side or the other, and then it's going to clip all the stops. So all the people that were playing, this trading range, they were taking profits, selling up here, and then they're taking it to the downside and reversing. Well, all the longs are also getting their stops clipped as well. So what we're going to have to do is, we'll look at kind of this rectangle that we're in. We'll recognize that the consolidation pattern is probably more like this now, and that range is going to be a lot wider. So you could easily see silver futures turn back up, but this is kind of the picture we're in right now. There are some concerns here with, DMI minus crossing up over DMI plus. That's a concern. Stochastics are starting to roll back over. The average true range is going up, which means that it's more volatile market. So going to just have to keep an eye on that one as well. Now, seasonally, gold on the 4th, so this would be Sunday's close, On up to the end of February, it's gone up 12 out of the last 15 years. Average is about $35. But I think that it's a lot more than that, given the volatility at the moment, especially in the last few years. Now, these metals do tend to peak around February for whatever reason. Silver historically does peak, same with gold, so we'll keep an eye on that. Here's your platinum chart. We're back down at that critical support level. We did have a lot of buys, 995 down onto 985 here, playing this support zone. Remember, we got out, closer to this 1050, and since then, this pullback here. So we're going to want to look at keeping an eye on this level right here, because we're going to close right about there at that support level, and we'll see how we trade from here. See if we could trade back up to that 1050 level as well. Copper market rolling over as well. We're going to have to keep an eye, expand this one out just a touch. Here's your catalyst here. You get the 10-year note selling off pretty aggressively. It's going to push those 10-year yields up. Same thing with the bonds correcting as well. So they're back in this type of phase. Going down to the other markets, all your foreign currencies are correcting across the board. Aussie, pound, Canadian dollar, Swiss franc, Jap yen, they're all correcting. So dollar index going up here. See this breakout? It punched out to the upside. So we'll keep an eye on the dollar. It's coming out of this like triangle wedge formation, and it may go for a few days. That's why you see a lot of these analysts, they're buying more of the Dow, more of the large companies, not profitless tech, not high beta in this type of environment. And then they're also buying the dollar and they're buying gold at the moment. So we're going to have a bunch of Fed speakers, I believe, next week. So we can look more. And then, we can look into next week. We're probably going to have a bunch of different people coming out and talking. So here, looks like, here, it's not till, looks like Tuesday, you're going to have your people coming in. You're going to have Powell speaking again. And he'll probably spin this thing dovish like he has before. So that's why being positioned in the metals ahead of that move is probably a smart idea. But if you have any questions, futures option trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trade.